Well, they're at it again, folks. We're not even a month into 2021, but we can already see exactly where we're headed. This all starts with Gamestop, a retail brick-and-mortar gaming company that doesn't have to go the way of Blockbuster if they played their cards right. Trading below $10 for most of 2020, things started to look a bit better for this past October when the company announced a partnership with Microsoft and revealed plans to revamp its stores along with its business strategies. This is where the hedge fund Melvin Capital and Andrew Left of Citron Research come in. Citron Research released a video report stating that they believed GameStop was overvalued at $40. Believing it would go back to $20, they were shorting it. So these hedge funds piled in, and short interest grew to over 100% of the stock shares GameStop has in total to be traded. This is where the online research group Wall Street Bets gets involved. They take notice of GameStop being massively overshorted by these hedge funds, which based on their research isn't warranted. These retail Wall Street Bets traders buy up GME, causing what's known as a short squeeze. A short squeeze is caused by buying up the price of an asset, causing shorts to have to cover, which in turn drives the price up even further. Chamath Palihapitiya even joined in on the fun and bought $115 February calls. He didn't do it for the money. He's going to donate all of the profits made from that trade. He did it for the same reason the retail traders did it. Melvin Capital took out massive shorts, and ultimately retail traders busted them up and they had to cover, losing billions of dollars. Ken Griffin of Citadel and Steve Cohen of Point72 Asset Management both had to step in and inject over $2.8 billion to bail out Melvin Capital and cover their positions while getting out of their shorts. Then earlier today, Robinhood stepped in, blocking the ability for its customers to buy GameStop on its platform. Then they sent out this tweet. In light of current market volatility, we are restricting transactions for certain securities to position closing only, including AMC Theaters and GME GameStop. The problem here is that the traders on Robinhood are not its customers, they're the product. Robinhood sells its order book flow to third parties who ultimately fill these orders and in turn make money on the spread. Who fills the majority of these orders? You guessed it, Citadel. The same Citadel who had to pony up over $2 billion to allow Melvin Capital to cover their shorts. Citadel, who's also majority owner in Robinhood. Robinhood stops trading and allowing Melvin Capital to cover their shorts without any increased buy pressure. Robinhood makes money from selling its retail customers' order flow to Citadel. TD Ameritrade and Charles Schwab then jump in. They say they're going to place restrictions on certain types of trading activity based on the interest of mitigating risks for their company and their clients. Which clients? Certainly not to protect the interests of retail traders. We're talking about the same Andrew Left here that was banned for 5 years from trading on the Hong Kong Stock Exchange, ordered to pay $4 million in legal fees and repay over $1.6 million he made in trading profits. And now the CEO of NASDAQ jumps in and says they'll halt trading if they link unusual activity to social media chatter. What happened to free markets? The entire stock market is now a confidence game. It's a facade that's disconnected from reality. This is what we get when there's not a sound economic and monetary policy. This is what we get when there's no accountability. Let's face it, the whole financial system is broken. We've heard it before, too big to fail. The fact is that the federal government, along with the Federal Reserve, have decided that free markets are dead. The whole thing is being propped up by stimulus and the ability of the Fed to continue to inject liquidity. Why is that? Because the entire country's pension system relies on it. Because the majority of wealth is stored in it, left irresponsibly managed for far too long. There is no going back. We now live in a world where countries are racing to devalue their currencies. We see the smart early money looking for a way out from all of this. That way is Bitcoin. So please like this video, follow me on here, and in the next video, I'll attempt to explain why I feel Bitcoin is our best chance at a way out from all of this.